Thursdays, and on Thursdays, if you know, we still do the daily financial news, except at 7:30. We do it at 7 a.m. Why do we do Thursday different? Simply, one of our experts needs to do their discussion at 7:30, verse 8, and I believe it is important that the daily financial news comes out first. I won't lie, Thursdays are a little rougher than the other 6 days because I want to make sure I get up early enough to do the same deal, read about 60 minutes. So we do that on Thursday every week, 7 a.m., and I hope you enjoy the show. Let's congratulate Chris. Chris, congratulations for getting your deal. If I remember correctly, that's your 7th rental door. Congratulations, Chris. Your card will go out in the mail today. Next up, folks, do me a favor. I have just added a video on my website, One Rental at a Time. It is on the home page. You got to scroll down a little bit on your phone or your computer. I basically give you the story of one rental at a time and 15 conversations with millionaires. Lots of people have asked for it, so I decided to create some content for my website since I don't really put anything there. So I put that video there. Let me know if you see it. Check it out. Let me know if you have any questions. And go ahead and look at onerentalatatime.com. I don't talk about it nearly enough. So lots of interesting stuff to talk about today. I guess we're going to go bottoms up today, just kind of reverse order of what I read. First and foremost, it looks like Russia is actually building troops on the border, not reducing. Shocking that Putin would lie. I mean, really? Anybody shocked by this? We shall see what happens. It certainly appears that the U.S. stock market thinks something is going to happen. Bond yields are down, gold is up, risk assets are off. Again, when you look at the market is screaming fear. And you can see that in the news today. So the market believes something is going to happen. Next up, I saw that Gucci's revenues were up 31% year on year. I don't know about you, but that screams, what are people doing with their money? I remember several times over the summer going to the mall. Olivia and I, there's a local mall where we go and we walk around and stretch our legs. And there was always a line out the Gucci store. So shocked that people took their stimulus checks or others and bought Gucci shoes or loafers or whatever they were buying. But yeah, shocking. It's all the big brands, Bentley, Ferraris, Gucci's, Louis Vuitton, all had record years in 2021. I'm not sure that 2022 is going to be all that kind, but we shall see. Looks like the yield curve is continually to flatten. The 2 and 10 is now, as of this morning, within 40 basis points. We kind of go on alert when it's a half a point or 50 basis points. This is a classic recession indicator. Again, it's an indicator of a future recession. It's one of those early warning signs. It is by no means perfect, but it is one that is reviewed and discussed. And think about it. Just think about you as an individual. Would you lend money to someone at the same rate for 2 years as 10 years? I don't know about you, but if I was going to lock my money up, I would certainly want more of a return for 10 years than 2. But when the market gets flat or inverts, that usually is a sign that there's a problem somewhere in the economy. So we must watch for that. Well, we have learned who the most hawkish and most dovish Fed president is. We know who the most hawkish is. That is who we talked about on Monday, James Bullard. The most dovish award goes to Minneapolis Fed President Neil Kashkari. Neil Kashkari, based on an article I read yesterday, says that inflation will just go away. It's not real. Neil, you're wrong. You're obviously allowed to have your opinion, but you're wrong. The difference between Neil and James is a voting member of interest rate policies this year, and Neil is not. If you don't know, the Fed presidency every year, or I think it's every year, might be every other year, they alternate who can vote and who can't. So Neil, you can't vote. James, let's hope you step up and do at least a half a basis point on the 10th. Looks like we have a new market that is most unaffordable. This market has surpassed San Francisco, LA, and yes, even New York City. Any guesses where the most unaffordable housing market is today? Again, remember affordability, price, interest rates, and average local wages. The answer, Miami, Florida. Miami, Florida is now the most unaffordable market in the country. Obviously, they have had a lot of, Northeast money come down. They are not dependent on local wages. So yes, Miami has overtaken the most unaffordable market in the country. That is an article on The Real Deal. That's one of the real estate sites I try to read every morning. Unemployment claims rose this morning. Again, I believe the economy is unhealthy. I think we are about to have a recession. You're going to see this number rise going forward, and you're going to see people come off the sidelines when their stock portfolios or crypto assets are not producing the income it once did. It was 248,000 with new claims, the expectation of 219, and it was a rise of 23,000 claims week on week. So again, a single data point we don't worry about, but this number we look at every week. We will see if the trend is reversing. There still are 10.9 million job openings. Again, that number has been over 10 million for quite some time. Interesting in the car market, 8 out of 10 car shoppers are paying over sticker price. Yep. Car dealerships are making a mint. I wonder if they will suddenly have less supply going forward for much longer than required. We shall see. Cheesecake Factory. Cheesecake Factory exceeded revenue, but missed on earnings. They missed on earnings because of inflation. Obviously, a lot of the food industry, inflation is real, wages are real. Cheesecake Factory actually came out and said, we are going to have to raise prices across our menu. So that will be coming, and obviously the market, the stock market would like that because, again, they've been eating margin, hence revenue beats, earnings don't. So they took it on the chin with earnings. They now are going to fix that by raising prices. Palantir, often talked about one on social media, missed. Folks, I sold software for a living. I know you are attracted by these big 9-figure software deals sold to the government. I have sold software to the government. It is good when it's good, but it is bad when it is bad. They do not have the same normal buy cycles as commercial buyers. So if you are dependent on the government to buy, it won't always be good, right? So companies are realizing that if that's your lion's share, that it's not always dependable, which is something I could have told you. Autonation beat top and bottom, 55% surge in used car sales. Again, new cars are scarce, so used cars are up. Walmart. I don't know how to read this one. Walmart is one of those that's kind of the stalwart of struggle, if you will. It's kind of where people trade down in a recession. Walmart had record U.S. sales on the back of groceries. They beat top and bottom, and they raised dividend 1 penny, and they raised guidance for the year. Is it one of those things that's what's good for Walmart is good for America? What's good for Walmart bad for America? I don't know if there is a connection, but it's always made me, because if you go to Walmart and you trade down, do you go to the dollar store? I think that's kind of the way it goes. So yeah, we need to watch that. The 30-year is now over 4% for owners. Investors, change your spreadsheets. Investment loans are now over 5%. You might be lucky with enough down to get something in the 4s, but investor loans, often quoted 20 or 25% down, are in the fives. I got notes from 3 or 4 non-qualified mortgage lenders this week. All of them have had to raise their floor rate. Yes, we had floor rates. You probably heard on my channel, floor rates sub 4. No more. Floor rates are now above 5. Change your spreadsheets. Again, this is just the cost of capital, or as Jason Hartman says, the cost of money. Change your spreadsheets. Don't get caught by doing the wrong math. Again, always a great day to buy a great deal. Rising rates should eventually slow the market, and we will be able to find the motivated sellers. My course, How to Get Started One Rental at a Time, is more valuable today than a year ago. What we are going to see is doing the work, seeing inventory build, and identifying where a deal could be made is going to be the key to getting deals done in 2022, my opinion. Looks like Roblox, I think I'm saying that right, is crashing as kids, mainly teenagers, I assume, are returning to the real world. I don't know anything about Roblox, but apparently it's a metaverse play. And apparently kids were losing themselves hours and hours during the pandemic. Now they are returning to the real world, and dare I say, not a day too soon. They missed top, missed bottom, user growth missed, just ugly numbers across the board. I don't know this for sure, but I'm going to guess this is a Kathy Wood stock. And knowing Kathy Wood, if it is, she bought more. That's just a wild ass guess. I have no idea. Looks like traders are finally pricing in not only a half a point move on March 10th, folks, they are pricing in something that they have not done since 1994. They are pricing in. It's not big odds, but the odds are on the board. A 50 basis point move in March and a 50 basis move at their next meeting, which I believe is in late April. That would be a full point in 2 moves. Yesterday, I had 3 important conversations with Anna Kelly, where we went through what happens to the economy, stock market, real estate, residential and commercial, and unemployment in 3 scenarios. The Bernanke slow and steady, the Paul Volcker fast, then there was the third and most likely fast and then retreat. You need to watch those. I believe there's a chance that they come out and do. I can't fathom half a point and half a point. I need to think about it. I've been very certain that half a point comes in March, but we now have something else to think about. Looks like Google is going to follow Apple in adjusting their privacy settings. Why is this important? Well, if you invest in Facebook, or I think it's called Meta now, you need to be aware that Apple's simple change whacked $230 billion off Facebook's market value. Yeah, they're in trouble. Fed minutes. We need to talk about the Fed minutes. I took away kind of 4 main points. Number 1, they are talking about hiking rates, being more aggressive, and reducing their balance sheet. It is that combination that freaks me out. In 2018, they lowered their balance sheet $500 million. $500 billion. Sorry, $500 billion. I was like, that can't be right. $500 billion, and the market had conniptions. They now are talking about lowering it $2 trillion while raising rates. Oh, it's going to get rocky. Number 2, inflation is spreading. They had often believed it was transitory, but now they're saying it is spreading. All I have to say is, duh. Unwinding the bond portfolio. This is the $2 trillion, the $9 trillion, 9.1 now, I believe. They could be doing it aggressively. That line freaks me out because they haven't done it well before, so it's going to be interesting. Some Fed presidents wanted to stop bond buying immediately. I wish they would have, but obviously they did not. Couple more earnings to talk about to wrap up today's daily financial news. Remember, like, subscribe, comment, be a part of the channel. DoorDash beat on top line revenue, missed on bottom. They had record revenue of $1.3 billion, but they still lost 45 cents. Actually, I think expectations were 25 cents. They lost 45. Fastly beat top and bottom, but gave very weak guidance. Cisco Systems, Cisco Systems to me is that tech stalwart that tells me about rest of world technology. They beat top and bottom and gave a rosy outlook. TripAdvisor missed top and bottom, but is trying to paint a picture about better travel in the summer. We shall see. I certainly hope so. And finally, US Foods exceeded revenue, missed on bottom, and gave a downbeat forecast. Inflation, inflation, inflation. So, folks, a couple things. Investor loans in the 5%. Please adjust your spreadsheets. If you are in my course, adjust your spreadsheets this morning. Mortgage rates are no longer in the 4s, they are in the 5s. Don't get got. This is a time to do your homework. The market will be slowing down. What does that mean? Less transactions. Once we have less transactions, inventory will slowly build. Your buy box will expand in quantities, and you will be ready to get a good or great deal, hopefully in the summer. Remember, it is always a great day to do a great deal. You must do the work. You must do this on your own. If you have questions, leave comments below. And remember, I put a video on my website, onerental@a-time.com, telling you the story of one rental at a time, as well as the story behind 15 conversations with millionaires. Let me know what you think. Have a wonderful day. And I'm going to get ready for Jonathan Twombly. Take care. Bye-bye.